Let's go. All right, so let's get you right. All right, tradingview.com is where all traders go to really trade, all right? So when you go to tradingview.com, it's important that you do this so you know how to get to it, okay?
Okay.
Hold on. All right. Cool. All right, tradingview.com is where everybody goes. So you hold this, move this over here so you don't have to stretch that out. All right, cool. So go to products, go to super charts. All right, cool. All right, this right here, the best way was first to start about going to something that I haven't charted up. So in the middle, what you want to do is to click, like to go to a different currency or a different asset. Just click on the white spot. Click on anywhere that is white. Like click right there, right here where it's white. Click. All right, now type in GBP. G as in B as in boy. P as in Paul. A as in apple. U as in umbrella. D as in dog. Okay, and then we're gonna go to one of these right here because I shouldn't be on capital com. All right, cool. We got a clean chart, right?
Mm-hmm.
So now remember, tell me what you remember right now. So what is a bullish candle?
Means they buy from the bottom, and they sell from the top.
Okay. So if you look at this candle right here, is it bullish? This green one, is it bullish or bearish?
Bullish.
Okay. If you look at the red one, is it bullish or bearish?
Bearish.
Okay, cool. So it means that it opens at the top, closes at the bottom, right?
Right.
What is the wick right here? What does that mean? You remember? Like this right here?
The candle.
Yeah, this candle. The top of the wick means that's the highest price got during that time frame. Okay.
Okay.
The low part of the wick means that's the lowest price got during the time frame. Okay.
Okay.
All right, bet. So here we go. First thing that we want to do is we want to do what's called a top-down analysis. What is it called? A top-down analysis. All right.
Support.
No. Listen to me. What we want to do is call a top-down analysis. It means you start at a high time frame and then you work your way down to a low time frame. Okay?
Okay.
All right, so first thing first. First time frame we want to go to is the daily. Okay? So that means when you click on the daily, that's the little D right there, right?
Mm-hmm.
That means each one of these candles represents one day. Okay?
Yes, sir.
Makes sense?
Yeah.
So when you click on the D, what does that mean?
It means one day.
Okay, so that means this candle is the start of the day, the end of the day, right? This candle right here is the start of the day, end of the day. Okay. Now if we go to the 4 hour, that means each one of these candles represents 4 hours. Okay.
Okay.
Okay. All right. Now, so on the daily chart, we can zoom out. Okay. Now, I'm gonna teach you something real quick, something extra that you haven't been taught yet. Okay. So when the market is moving down, we call this a downtrend. Okay. So when the market is moving down, you do what?
Sale.
Okay. Cool. All right. So in a downtrend, you're selling. Okay. Now, when the market is moving sideways, this is called accumulation.
Accumulation.
Your enthusiasm overwhelms me. You excited about it?
Yes.
All right. The sideways movement is called accumulation, or some people call it consolidation. Okay.
Okay.
That means that the market doesn't really know what direction it wants to go in. It's no longer trending. It's just moving sideways. Okay. This is a trend. This is what it looks like to trend down. This is what it looks like to trend up. When the market is doing this right here, it's called consolidation. All right.
All right.
All right. Need some water?
Mm-mm.
Okay. Now look, when the market does this right here, breaks down, and then it goes up, guess what? This is called, this is when it breaks trend, and we call it a reversal. Okay? A trend reversal. Okay?
Yes, trend reversal.
A trend reversal. Absolutely. All right, cool. So now this is every 4 hours. What's our first step when we're attempting to find how we're going to get into the market? Do you remember? I didn't teach you that.
A trend reversal.
No. All right, first thing that we want to do is we want to find out where price is at right now. Okay. So this little line across the screen is great, where it says Great British to the Australian dollar is at 1.94415. You about to start making me yawn, bro. So what we want to do is we want to put a horizontal line right there so that we can see where price is at. Okay.
Okay.
So what I want you to do is take your mouse. All right, go over there to the tools section to the left. This area right here is called the tools section. Okay. All right. It's called the tools section. Now, when you're at the tools section, go to the second family. It's at the top. All right, click here, the drop down, the little caret to the right. Go to the right. That allows for you to do a drop down. Boom. Okay. Click on it once. Just click and release. Okay. Now, you see where it says horizontal line? You're going to click on that. All right. You're going to put it right there on that line. And typically what I like to do is I like to take this line and turn it to like a lime green color. Like a light green color. All right.
All right.
Now, what I want to do is I want to focus on this. Lets me know where market is right now. Now, because the market does things over and over again, like a pattern, okay, we want to find out where is in the past the pattern has happened at, where people like to buy from, where people like to sell from, okay? All right, so watch this. We go here, see there's no data right here because this is the present. When we go over here to the past, this is letting us know, okay, the market came up here and then dropped. It came up here and then dropped. It came up here and then dropped. So if I see that, I'll call you right back. Call you right back. So if I see this, I'm going to put a horizontal line here. Okay. So
Okay.
see, that time I didn't have to go over there to the tools section, right? I just pushed option H. Option H allows for you to do a horizontal line. Option V allows for you to do a vertical line like that. Okay. So let's get that back. Watch this. So I go, where did the market go previously? It went up there, dropped. Went up there, dropped. Went up there, dropped. Went up there, dropped. You see that? It happened over and over again?
Yes, sir.
Okay. What did we just do? We created what's called a ceiling. You know how you got a ceiling? Like right there, a roof?
Resistance.
That's called resistance, absolutely. All right, we created resistance. All right. Now, over here, when we see the market drop to here, it's like this creates like a floor. What is that called?
Support.
It's called support. Absolutely. Okay. So this is support. This is resistance. Okay. So that's good. You got that right. Now, typically, what I like to do, if this is Great British Pound to the Australian dollar, I like to find out how many pips is this. Right now, it's like 102. So that's not good enough for me. So what I want to do is I want to extend this out. There's a lot of action that's happening down here. So typically, I wouldn't extend it. I wouldn't push it up. I'll drag this down a little bit so that now we can use the wicks as support. Okay.
Okay.
All right. Now, check this out. So this right here now, because we made that little move there, it made this zone be 135 pips. Okay.
Okay.
Right. Now watch this. Going to, that's a top-down analysis, right? So we started at the daily, then we went to the 4 hour. Now we go to the 1 hour. All right. Go to the 1 hour, and we get to see what all we did. We can refine everything that we did. When we go over here, we can see that we can include some more wicks. Remember, whenever we can get 2 to 3 touches, that's a good thing, okay?
Okay.
So 1, 2, 3, 4, 5, 6, 7, 8. That's a lot of touches. So that means that that's a good resistance, okay?
Okay.
It shows you that it happened multiple times. When you come down here, you watching, or you no longer paying attention. You come down here, make sure you got the mouse in your hand. Come down here, you see 1. Okay, go put the mouse where it touches on the wicks all the time to support. You don't gotta click. Just show me all of the times a candle wick touches the support at the bottom.
A line versal.
No, I said that's 1, that's 2, that's 3. I want you to show me all of the times a candle wick touched the support line.
It goes down.
Yeah. Show me the rest of them.
It goes up.
No. Listen to what Daddy is saying. Show me all of the times a candle wick touches the bottom of the support or the support line. So for example, here it touched it, here it touched it, here it touched it. You keep going. Where did it touch?
Here it touched it.
Okay.
Here.
So you gotta click and then click again. Go ahead. You good.
Touch it.
Okay.
Touch it.
Awesome.
Touch it.
Okay. Great. Okay.
Touch it. Touch it.
Make sure you go up there and you click it. All right, perfect. Okay, so cool. So it happened multiple times, right? So we can say that that's a pattern. Perfect. So we want to trade off of patterns that has happened in the past. Now, because we have support at the bottom, we have resistance at the top, we now want to create what we like to call zones, okay?
Yes.
Zones where people buy and people sell from. So if we want to go here and create a zone, let's say that we create a zone from here. If I was to go from here to here and say that this is where a zone where people buy from, you know what that's called?
Sale.
I said, listen to me. This is a zone where people buy from, where when price comes down to this zone, it actually pushes price up. It is called a what zone? You're making me sleepy.
Resistance zone.
No, because this is support, remember? This is support, that's resistance. So if we say that this is where a demand zone is, okay? So think about it. You know how you like plushies. You have a demand for plushies, which means that you have to buy plushies, okay? But let's just say that you had a lot of plushies and you wanted to get rid of them. That means you would have a lot of supply of them, okay? So if I have a lot of supply, you have a lot of supply of plushies. Let's say you had 1,000 plushies. You would want to go sell them so that you can make a profit off of it, okay? So this right here is a zone. We're going to do it red, all right? And this zone, this is going to be called a what zone? I just said it.
Supply.
Supply zone, absolutely. All right. So now we got a supply zone marked. We have a demand zone marked. All right.
All right.
We're gonna stop it right there for today. All right.
All right.
So you've been able to find resistance, find support, and find the demand zone, and find the supply zone. Good job, bro. All right.
All right.